everyone, welcome back to my channel. It's Angela of AM Bookkeeping, your trusted real estate bookkeeper helping investors, property managers, and real estate professionals streamline their finances. Today, I am going to walk you through setting up a chart of accounts in QuickBooks, specifically tailored for real estate businesses. Before we dive into the setup, let us quickly break it down. What exactly is a chart of accounts? In simple terms, it is the blueprint of your financial records. It categorizes everything: your income, your expenses, assets, liabilities, and equity, so you always know where your money is going. For real estate businesses, a generic pre-built COA in QuickBooks just won't cut it. You need a structure that fits rental income, property expenses, loans, and capital improvements, all the moving parts of real estate accounting. So let's get to the fun part, building your chart of accounts. We will break it down into 5 main categories according to the 5 types of accounts. First up, income. This is where we track all the money coming in. Some key accounts that you should include are rental income, the rent collected from tenants, late fees and penalties, so these are any extra charges collected from your tenants, other property income, things like laundry fees, parking fees, or pet rent, billable expense income, so these are reimbursements for expenses paid on behalf of clients or your tenants. Interest income, these are earned from security deposits, loans, or other interest-bearing accounts. Sales price flips, so this is for flippers, the total revenue from selling flip properties. Security deposit withholding, any portion of a tenant's security deposit withheld for damages or unpaid rent. And then, lastly, the wholesaler fee. These are income earned from assigning a real estate contractor to another investor. So organizing your income like this ensures that you can separate different revenue streams and get clear insights into profitability, so you know which source of income is generating you more money and which is not. Now let's talk about expenses. This is where most real estate investors need extra detail because properties have a lot of moving expenses. What I like to do is to pull out an 8825 form and base my initial expenses from there. Basically, what this form does is report income and deductible expenses from rental real estate activities, including net income or loss from rental real estate activities that flow through or from partnerships, estates, or trusts. From the left part of the form, we can see the rental real estate expenses section. So, as you can see here, we will be adding the expenses listed there in our COA. So here we have advertising, auto and travel, cleaning, commissions, property insurance, legal and other professional fees, interest, repairs and maintenance, property taxes, property utilities. So for property utilities, what I like to do for this particular account, I like to create sub-accounts specifically for electric, gas, and water. Now, I also would like to add expenses for flip accounts since I told you earlier that this video is for all sorts of real estate businesses. First, we have purchase price, buying cost, rehab cost, holding cost, selling cost, and debt service. All of these accounts would make up our cost of services accounts for real estate businesses. For the other expense accounts, we have advertising and marketing, bank charges and fees, business insurance, interest paid, legal and professional services, meals and entertainment, office supplies and software, other business expenses, purchase reimbursable expenses, rent and lease, taxes and licenses, travel and applied cash bill, payment expense and categorized expense, utilities, depreciation and amortization. Having separate expense accounts helps you analyze where your money is going, identify tax deductions, which is very important since, of course, a lot of us wouldn't want to pay a bigger tax knowing that we have deductions, and also to control costs. Now, on to assets. These track things that you own that add value to your business. Of course, we have bank accounts, construction escrows, flips in progress. I like to add sub-accounts for this parent account. So I have FIP purchase price, flips in progress buying cost, and rehab cost. Purchase deposits, tax insurance escrows, and of course your fixed assets or your Property assets, which includes the land, the building, closing costs, and capital improvements. Tracking assets properly helps when calculating depreciation and knowing your true property value. Finally, liabilities and equity. These show what you owe and your business's worth. So we have accounts payable, credit card, line of credit, security deposits payable, conventional loans, hard money loans, and owner's contributions or equity, and retained earnings. Having these accounts structured correctly ensures that your balance sheet is always accurate and lenders or investors can quickly assess your business's financial health. Alright, now that you know what accounts you need, let's hop into QuickBooks Online and set it up. Now, I'd like to show you two ways to do this. First, through CSV imports, and second, manual input. But before anything, I want to show you three ways to access the QuickBooks Online chart of accounts. First, through the gear icon on the upper right side of the screen, upper right, shown under the Your Company tab. Second, in the left side of your dashboard under Transactions. So in here. So if you have trouble remembering this too, which I totally understand because if you're a beginner, the whole interface is quite overwhelming, you can just click on the search tab and type Chart of Accounts. Okay, so now that we have that settled in, let us start. First is through CSV imports, which we can access either through the gear icon, go to the Tools tab, and then import data. Or you can go to the Chart of Accounts, click the drop down in the New button, and then import. So for this method, you would need an Excel file with all your listed accounts, all your listed chart of accounts. It should follow the same format provided by QuickBooks, which we can see here. Okay, so I already have a pre-made chart of accounts here that follows QuickBooks format, which are account name, account type, detail type. But I do have to create additional adjustments to this since, as I mentioned earlier, that some accounts are sub-account to another, like the one in expenses. So if you remember, I put sub-accounts under the property utilities. So we have to change that into a different format that would make it into a sub-account. Again, we have to fix that because if we format it just this way, like this, all of these are gonna appear as parent accounts. So what you should do first is establish the parent account. So based from our example here, we have property utilities. To create sub-accounts for electric, water, and gas, we just have to type in property utilities, add a colon, and then the name of the sub-account. So let's say gas. And we're gonna do that for the rest of the sub-accounts. Once we're done, what we just need to do is to import it. So we click on Import Data, choose Chart of Accounts, and select the file to upload. Now, we have to map the fields that I mentioned earlier to its corresponding headers. So, as you can see right here, we don't have the account number checked because it wasn't in our Excel. So, I didn't have any data inputted under the account number. Next, we have to make sure that all the boxes are in black. If it's highlighted in red, we have to choose an option from the preset list to make sure that the account is categorized correctly. So we have to make sure that all of that are good. Once you're done with that, just click Import. Now, I would just like to remind that there are some instances that not all of your accounts will be imported. It could be because it already exists in QuickBooks pre-entered accounts. So there are cases like that. For our second method, we just have to manually input the accounts. Now, this will take time compared to the imports, our first method. I would suggest doing this if you just have to add a couple of accounts, 2 or 3, and this is not ideal for initial setup because there are lots of accounts that we have to deal with in the initial setup. Anyways, what you just have to do is to go to Chart of Accounts and click the New button. Now you just have to populate this form, fill out the account name, account type, and detail type. And if it's a sub-account, just click this box and pick the parent account, and then just click save. If you're doing a couple of accounts, click the drop down arrow and click save and new. So it will automatically appear a next form, another empty form. Another thing that I want to quickly discuss here is the setting up of property accounts. Now, as a real estate business owner, these are the main things that you want to get right from the start because it will really set you up for success. Now, I will be discussing this further, much more in depth in my next video regarding property purchases. But let me show you quickly how I set up my property accounts. Now, if you ask me, I have seen a lot of bookkeepers set up property accounts this way. And while it is not wrong, it also is not completely efficient because it will create financial reports like this. Now, here in AM Bookkeeping, we do things differently by optimizing QuickBooks Online features classes. What we do is we don't categorize your chart of accounts per property with different sub-accounts for land, building, and capex. Instead of adding the properties and its sub-accounts one by one, we create a super generic account. First, a parent account named properties owned, or you can name it how you like it. The gist is that it's your real estate properties that you own. Next, create sub-accounts for land, building, closing costs, and capital improvements. So these are just very generic accounts. Now the classes feature comes in, which we have to activate here in our gear icon on the right side of our dashboard, account and settings, and the advanced tab. So we just click on this track classes. Once we turn on class tracking, when we record a purchase of property, it will look like this. So let me create a journal entry for a way earlier year so we can create a balance sheet for that. So what I do is record the purchase of property. We have land, building, closing cost, capital improvements. So these are again under the very parent account, the very generic parent account. So I just made up these amounts, but in actual we use the HUD statement for this, which I again will discuss more in depth in the next video. So let's say we purchase this without financing, so it will credit from our checking account. Now the next thing to do here is to add the classes. So it is in this last column. This will be the name of the property that you are recording. So let's say 456 corner. And let me make another set for another property just so you can see the picture of how it will look like in the financial reports. So basically what this method does is, instead of creating a one-dimensional financial report, which like I showed you earlier, you can create a two-dimensional report, which is more efficient and easy to read. So you can actually see from this report alone the comparison between your varying properties. And once we recorded all the related transactions, we can actually see the net income per property, and it will appear here, which I think is the very purpose of using an accounting software. It is to create valuable reports that would give you valuable data to aid you in making big financial decisions. So even from a balance sheet, we can actually really see a lot of value already. And that's it. You now have a well-structured chart of accounts tailored for real estate businesses. Setting this up right from the start will save you so much time and make tax season stress-free. So for a quick recap, you have to keep income and expenses detailed, use sub-accounts for better reporting, optimize the classes feature to create two-dimensional financial reports. I hope this tutorial was helpful, and if you have any questions, clarifications, drop them in the comments below. And like I said earlier, for our next video, I will be discussing an in-depth tutorial on how to record property purchases for real estate businesses in QuickBooks Online. You're going to want to do this right because this is essentially the very core of your real estate business. And if you want more real estate bookkeeping tips, don't forget to like, subscribe, and hit the notification bell so you never miss a video. Thanks for watching, and I'll see you in the next one. Bye!